Welcome, and thank you for standing by. At this time, all participants are in a listen-only mode. During the question-and-answer session, you may press star 1 on your touch-tone phone. Today's conference is being recorded. If you have any objections, you may disconnect at this time. I'll turn the meeting over to your host for today's conference, to Ms. Linda Abruzzese. You may begin.
Thank you, and good afternoon, and welcome to our webinar on a basic guide to exporting how to ship your products overseas. This webinar is being brought to you in cooperation by the U.S. and Foreign Commercial Service, the National Customs Broker and Forwarders Association of America, and John S. James Company. My name is Linda Abruzzese, and I am an International Trade Specialist for the Trade Information Center for the U.S. Commercial Service, the Department of Commerce. I will be today's moderator. Our main speakers are Brian E. Barber, who's the Director of the National Customs Broker and Forwarders Association of America's Educational Institute, and Jan Fields, Corporate Manager of John S. James Company. All speakers will be available at the end of this presentation to answer your specific questions, and contact information will be also provided at the presentation. I'd like to let you know that Brian will give you an overview of the National Customs Broker and Forwarders Association of America and why this basic guide to exporting session is important to companies, members, and the association. And Jan Fields will cover the considerations when selecting a freight forwarder, product and shipment considerations impacting the delivery, time, cost, and mode of shipment, as well as planning your sales quote. And she will also talk about documentation and other details relevant to actual shipping your product. Now, we do have a few housekeeping details to make sure everyone gets the most benefit from this afternoon's webinar. You will be able to hear this presentation via your telephone and view it simultaneously via your computer. So if you're not hooked up through both, please take a moment to do this. And if you are experiencing any technical difficulties, please press star 0 anytime during this presentation. We will be taking voice questions during this webinar. To ask a voice question, please press star 1 after the presentation. We also invite you to type in questions on your screen as they occur to you during this presentation. There is a Q&A icon on the upper left-hand side of your computer screen where you can click on it and type in your questions anytime during this presentation. We will compile these questions and answer them after the webinar, and we will send you some answers via these questions later. And now I'd like to introduce live online Brian Barber, who is the Director of the National Customs Broker and Forwarders Association of America. Brian, thank you very much for joining us.
Well, thank you, Linda. As Linda mentioned, I'm Brian Barber with the NCB FAA Educational Institute, and I'd like to personally thank the Department of Commerce for inviting both Jan and I back today for this 2011 reprise of How to Ship Your Products. I'd also like to thank Doug Berry, Kelly Hollowell, and Linda Abruzzese with the DOC for allowing the NCB FAA to participate in today's session. For anyone who's unfamiliar with the National Customs Brokers and Forwarders Association of America, I'd recommend that you please visit our new website at www.ncbfaa.org for information on the association, including trade education and industry outreach. We actually just launched a new platform last week, so there are some new exciting opportunities up there. We do offer continuing educational opportunities for both import and export, including the Certified Export Specialist and Certified Customs Specialist programs. You know, as we all know, education is key, compliance is key, and we do really pride ourselves in providing and disseminating as much information to the trade community as possible. A quick note for anyone who's actually on the line who is currently a CES or Certified Export Specialist participant, we will extend one CES continuing educational point for participation in today's webinar. If you do wish to receive credit for this, please email us at education@ncbfaa.org. Quick note on the programs, if you have any questions regarding the CCS or CES or the National Customs Brokers and Forwarders Association of America in general, please feel free to email us at education@ncbfaa.org, and we'd be happy to assist and take a look at your inquiries. As Linda mentioned, today's presenter, our primary presenter, is Jan Fields. Jan is actually the NCB FAA Chair of the Educational Institute. She is also the corporate manager of the firm John S. James, located in Savannah, Georgia. John S. James is licensed by both the FMC as a freight forwarder and as a customs broker by CBP. She carries with her many years of practical import and export experience. She's a licensed customs broker and carries both the CCS and CES designations offered by the NCB FAA. And with that, I'd like to turn things over to Jan.
Thank you, Brian. Good afternoon, everyone. As Brian said, I am a corporate manager with John S. James Company, and our firm, along with about 800 other freight forwarders throughout the United States, are members of the NCBFAA, and we do appreciate the Department of Commerce inviting us to speak with you today. What we're going to talk about is how to establish and maintain a successful export program. Now, as a freight forwarder, our functions are to coordinate the logistics and to handle the documentation on behalf of you as the exporter. In previous webinars that the Department of Commerce has sponsored, you should have already learned how to identify overseas market, target international buyers for your product, and they'll sort of get you into to purchasing or being able to sell your product. Today we're going to provide you with valuable tips for making your export process easier and more profitable and advise you of how to avoid costly errors. Of course, it's going to be impossible to cover everything you need to know in just an hour, so we're just going to touch on the basics of consideration when exporting. Exporting can be easy and profitable if you do it right. However, that's a huge if, because if you make one mistake, just one item that's overlooked, it can cost you dearly. That's why the very first thing I recommend is for you to partner closely with someone who has experience with exports, and that would be a licensed freight forwarder. We can hold your hand through the export process and just sort of help you get your feet wet with selling. How do you choose a freight forwarder? I'd like to first bring your attention. We had tried to show you a video on the BIS, or the Census website, a short video from the president of the Brokers Association, Jeff Coppersmith, who kind of explains in brief detail, I think the video is about 2 minutes, on what is a freight forwarder. I've left you with this website here that you can listen to the video yourself, and I'd highly encourage you to do so.
Yeah, and just to chime in, Jan, over here, I think it's about 3.5 minutes for the intro one, and it's a good overview of what a freight forwarder encompasses and why you really should look for one. So again, we strongly encourage anyone to take a look at that when you do have some time.
Thank you. Okay, so how do you choose a freight forwarder? First of all, you need to make sure the freight forwarder is licensed by the Federal Maritime Commission or for air shipments by the Air Cargo Association. It helps if there are members of an association such as the NCBFAA that keeps members up to date with their ever-changing rules and regulations. It's also important is that they have some system of proven knowledge and continued education. One of those ways on the export side is a certified export specialist. And this program, it is sponsored. It's available through the NCBFA, but it's available to exporters and freight forwarders, just anyone in the industry. It's an A to Z online course that you can take at your own pace. It's an A to Z, and it covers virtually every aspect of exporting. It's available, again, not only to freight forwarders, but exporters as well. So when choosing your exporter, it's a good thing to make sure that they've got proven knowledge and some system of continued education. Freight forwarder considerations when you're speaking with a freight forwarder. They're all different. Freight forwarders are like any other company that you'll encounter. You'll have a variance of knowledge, of expertise. So you want to ask your freight forwarder questions. You ask them, do they have an export compliance program? Ask who will be handling your account and what is their level of experience. They may, you want to get someone who has experience in the countries that you're exporting to, or possibly in your product, or has been in the exporting industry for a while. Who will be their backup and alternative? If you call, if they're on vacation, who do you talk with? It's good to establish that rapport with the freight forwarder. You also should choose a freight forwarder who's going to take the time to ask you questions. They are going to, if you've got a freight forwarder who asks you about establishing a compliance program to make sure all the considerations are met prior to the shipment moving. If possible, arrange a site visit so that your freight forwarder can be more familiar with your product. Really let him be an extension, or your partner be familiar with what you're exporting. It'd be great to be able to sit down and visit with your exporter also. With your freight forwarder also. Will give you an opportunity to see how they operate. You need to provide your freight forwarder with your expectations, not just as freight forwarders are different, exporters are different also. So there's different levels of experience from exporters. One, you need to provide your exporter with your expectations and ensure your freight forwarder is aware of your level of experience. Together, you should be able to establish a compliance with the Export Administration regulations. Don't necessarily, as in any industry, don't necessarily choose the one with the lowest rate. Make sure that you're comparing apples to apples, and when you're defining the services provided for the fees that are quoted. Now, you've chosen your freight forwarder, and again, freight forwarders are like any other company. You've got to develop, maybe you've got some specific products, specific chemicals or something, or there's some freight forwarders who specialize in niches like developing new exporters. Most freight forwarders, it's a good idea to put down your expectations in writing. Don't just throw out a request for a proposal without first discussing your requirements. Okay, so now you've chosen your wonderful freight forwarder that's going to hold your hand throughout all the shipment, and you've done all that right. And you have a buyer from overseas. The Department of Commerce has assisted you in obtaining someone who's interested. And your buyer says, okay, I'm ready to purchase from you. Give me a quote. Well, what we do as a freight forwarder, most freight forwarders will help you determine the cost and will generally provide you with a quotation without charging you for that service. We want you to get the business. The more business you get, the more business we get. So we closely look at the quote. We're very careful. It's sort of a catch-22, though, because if we quote too high, you won't get the business. And I'm meaning quoting too high by making sure all the possibilities that you encounter along the voyage are covered. So we don't want to quote too high because we want you to get the business. We don't want to quote too low because if we quote too low and all of a sudden there's an additional fee that we didn't consider, then that's going to eat into your profit margin. So we want to make sure there are no surprises and no unexpected expenses. Okay, some of the things we need to address prior to quoting. First of all, we're going to need to know if your commodity requires an export control classification number. Actually, we're going to have to identify the ECCN. The ECCN is provided through the Bureau of Industry and Security, and that's in a whole other webinar that covers this. About 95% of the cargo is exported under the ECCN number EAR 99, which is a general commodity which doesn't require a license or a specific number. Any kind of commodity that is like high technology, it could be items that are in short supply from the United States. If we are in short supply of coat hangers, we're not going to let you export all of our coat hangers, so there will be an ECCN number on those coat hangers, and you may be limited in the amount that you can export, if you can export them at all. So first of all, we'll need to determine that your product can go out to the country that it's being exported to. In addition to the BIS licenses, there are also licenses by different government agencies, such as the State Department. The State Department will regulate and control any type of weapons or anything that can be used in war against the United States, technology, weapons, items such as that is licensed by the State Department, may or may not be able to be exported to certain countries. There's also OFAC, which is the Office of Foreign Asset and Controls. They govern financial transactions like exporting to embargoed countries. Okay, so now that you've established that your commodity can be exported to this country, that what you need to do is to check all parties to the transaction, your consignee, your notified party, even the bank that's involved. You need to check all of those parties to ensure that they are not on a restricted party list. And each government agency puts out a list of parties that you are not eligible to export to. The BIS has denied parties that it's illegal to export to ABC company at this address in Germany because they've evidently had something, they've been denied their export privileges. State Department has a list of debarred parties. OFAC has a list of specially designated nationals. What they've done is the BIS has housed this entire list at this one website here on the BIS website under list to check. You need to check every single one to ensure that the parties you are dealing with are not on these lists. You can check this process manually. It would take a good bit of time. Most forwarders have an electronic means to do it. If you've got a huge database of companies that you're dealing with, you'll want to do it electronically to ensure you get everything correct. So the next thing you need to consider is what ultimate destination it's going to, and the ultimate use of your product. If you're shipping a product that can be used, a dual use, both for commercial use and military use, you need to ensure that it is what this product is being used for. One of the ways to do that, the BIS puts out a red flag, which is some of the considerations that it should trigger something in your mind saying, okay, I don't understand. When you have a consignee and you ask them, hey, what is this product, what are you going to use my product for? If they don't know, they can't tell you, that's an indication that they're possibly sending it to somewhere else, which you need to know the end use and the ultimate destination of your product. So things like that are red flags. If you're shipping something into a country that is not technically intelligent to be able to use that product, or to, like if you're shipping computer parts to a donut shop, that should trigger a, wait a minute, I should check more into what my product is being used for. You also need to consider anti-boycott regulations, and that is simply, it is illegal for exporters to participate in any country's boycott against the United States that's friendly to the United States. So that kind of goes without saying, and it's understandable. However, it's as far-reaching as simply receiving a request from a buyer to provide information such as the names and nationalities of your board member is a direct violation. There's no reason for them to know that information. So, again, that's another red flag. All right, so we've addressed those, and now we need to address product considerations. Are you shipping hazardous goods? Do you know that anyone and everyone who handles hazardous cargo, even just simply the documentation or the paperwork, must have specific training and certification to handle that? Are you shipping food, plants, animals, temperature-sensitive cargo, or will you require special equipment such as refrigerated containers? All of that needs to be taken into consideration prior to doing your quote. A refrigerated container, of course, is going to be more expensive than a dry container would be. If your cargo requires specific marking, labeling, packaging, or securing for export, you also need to incorporate those costs into the price that you're quoting your customer. Again, your freight forwarder will work very closely with you in asking those questions and establishing those costs up front. Are your commodities regulated by any other government agency, such as the Drug Enforcement Agency, the FDA, the Food and Drug Administration, or the USDA? So there are some different requirements there that will require you to have to provide additional paperwork at a cost to you. Okay, obviously, again, in the packaging of the goods, marking and labeling, you need to pack your cargo for the toughest part of the journey. Another consideration is marking should be generic, but identify the shipment. You want the steamship line or the carrier to be able to identify your cargo, where it's going, and the marks. However, you don't want to ship a box labeled Apple iPads that are going to go via train in interior Africa. So you want to secure and package your cargo, identify it with a purchase order number, something that can be tied to the shipment. Okay, so before your quoting process also, you need to know, what are your payment terms with the customer? Are they going to pay you in U.S. currency, or are they going to pay you in a currency where you're going to have to take on the risk of currency fluctuations? Are they going to pay you in advance? Probably not, and that's another red flag. If the customer says, here, I need this product so badly, let me go ahead and pay you cash in advance and you send it to me, they're pretty desperate to get that cargo, so you want to ask why. If their plant shutting down or something legitimately, that's fine, but you want to ask why they're so readily available or readily anxious to pay in cash. But payment in advance means that they'll send the payment to you, you get paid, and then you ship the goods. Well, they're not likely to do that. There's kind of a variation where I'll send you a deposit, you ship the goods, and then I'll send you the rest of the money. There's not really a guarantee that you're going to get the rest of your money. Open account is sort of the same thing. I'll ship it to you, and you, when you get it, you pay me. What if they don't? What would you do then? So there are safer methods that the exporter can use. One of those is a documentary draft. And in a documentary draft, what that is when you prepare your ocean bill of lading, you're going to consign that bill of lading to the bank or to the order of the bank. You're going to have your original documents, all the backup information, and you're going to send it to a bank in the destination country. Your buyer will simply go to the bank, they'll pay the bank what they owe, and when they do, the bank will then provide them with the documents, which in turn they can take to the port and pick up their goods. Now, there's still no guarantee that your customer, your buyer, is going to go to the bank. They may never go to the bank. Your car goes over there, so you'd have to get it back. So it's not totally safe. The safest method is via a letter of credit. And a letter of credit is going to cost you a little bit more to begin with, but the thing about a letter of credit is that it is a guarantee by a bank. It is not a guarantee by your buyer. You are not concerned about the relationship between the bank and the buyer. You are dealing with a bank overseas, and they have guaranteed that they are going to pay you a specified amount of money provided you comply with the terms on the letter of credit. Again, that if all stipulations can be met, your letter of credit will most likely define dates. They could restrict ports that you ship out of, and that's why you're going to need to know if there's a letter of credit. For instance, if I give you a quote out of the port of Savannah and your letter of credit comes in and it requires export out of the port of Los Angeles, then it's going to affect the price that we're quoting. So that's why we need to know if there's a letter of credit involved, and if possible, we can get, the stipulations of the letter of credit. Under a letter of credit, you will, again, it's a promise by the bank, but it is very specific. If that letter of credit requires that you ship 10,000 red pencils and your documents say 10,000 blue pencils, you may as well tear the letter of credit up and just ship on open account. So there is that catch, that as long as everything is exactly as the letter of credit requires, the bank guarantees you will get your money.
And Jan, just a quick note on letters of credit, and correct me if I'm wrong. If you're aware of any changes, like there is a time period where you can actually amend a letter of credit, right, to make sure you're falling within
that is correct, yes.
Stations?
And thank you, Brian. And what he's referring to is, I said just tear up the letter of credit. What you can do is say, for that same scenario, you can go to the customer and the customer can accept blue pencils, but they would have to amend the letter of credit. So they would have to go to the bank. The issuing bank would amend that letter of credit upon both of your agreements that you're changing it from red pencils to blue pencils. And once they do that, then the letter of credit has been met, all stipulations have been met, and the beneficiary is guaranteed their money. Okay. INCOTERMS. If you're not familiar with INCOTERMS, they are have just been ratified in January of 2011. They're internationally accepted standards on what costs are involved with the price that you are quoting. And the simplest way, again, I recommend is the website at the bottom where you can obtain the INCOTERMS book. And if you are exporting, you definitely need to get a copy of the book, familiarize yourself with the book, and it is very important to read the instructions in the beginning of the book. There are about, I believe, 13 terms now, but I'm going to go over them very, very briefly, and I'm going to group them in categories because I just spent 8 hours on an INCOTERMS seminar, so I don't think I can cover it in just this one slide. But if you'll separate it in your mind in that the price is going to be in pre-carriage, main carriage, and on carriage. And also any INCOTERMS must name a place. There's E-terms, which is the first and only E-term actually is X-Works, and it's EXW. And what that says is the buyer will purchase the product at the exporter's factory, actually at their door. The exporter just simply makes the product available at their door, ready for exports, and the buyer picks up from there. The buyer will arrange the pre-carriage to the port. They will arrange the main carriage from the port to the port of destination, and they will arrange the on carriage, which is delivered to their destination. That is the lowest. You would quote your price at your factory door. The next terms are F-terms, FOB, and it will give you as an example of a term. That will normally cover the seller will arrange for the pre-carriage to be delivered to the port or to a named place or port. And then the buyer will pick it up at that place and pick up all charges past that place. C-terms means that the seller pays for or quotes the product. It's delivered to the port, put on a vessel, and delivered to the country of destination, and the buyer picks it up and then arranges the on carriage. And then your last term is your D terms, and those D terms, again, begin with a D. That is where you, as a seller, would arrange for the delivery into the country's destination to your buyer's door. I will say one thing about the D terms is if you can, at all possible, avoid selling your product DDP. DDP stands for Delivered Duty Paid. And what you're doing there is you're guaranteeing that you're going to pay the duties in the destination country. So that's a huge responsibility. Whereas we in the United States, our duties, they fluctuate somewhat. But there's some countries, for example, in Mexico, they have a daily diary for duties. And today a cup would hold a duty rate of 3%. Well, tomorrow they may write and say, okay, this cup duty rate's gone up to 300%. So you as the seller have just bought that liability for the duties in the destination country. So avoid that if at all possible. If you have to quote DDP, your freight forwarder can assist you in giving you the duty rate as of the day that they're doing the quote. All right. So again, familiarize yourself with INCOTERMS. If you are exporting, that is your standard way of knowing the buyer and the seller are talking about the same price at the same place. Okay, so we've gotten through that far, and we're ready to provide a quote to you. Some of the information that we need to provide the quote is we need, of course, the port and point of origin. We'll need the point of destination. We'll need the physical dimensions of the cargo. If your cargo is over dimension, we would need possible permits to move it to the port. We'll need the gross and net weight. If you're going into an air container or ULD, we'll need to make sure it can fit through the door of the cargo plane that we're shipping it in. We'll need the gross and net weight per package. We'll also need to confirm that the packaging is in compliance with the solid wood packaging, which is required for most countries. That it's an international standard, and you'll need to be familiarized with that. It requires that even the pallets that you use, the dunnage that you use to block and brace the cargo, if it's of wood, it needs to conform with the solid wood packing material regulations. We'll need an estimated date of shipment and deadlines. If there are any deadlines on your letter of credit, it's going to tell you it must be shipped before this certain date, or the letter of credit will expire on a certain date, so we need to know if there are any deadlines there. Again, any special handling, oversized requirements, it may not fit in a container. We may need to load it in a vessel, a specific vessel or a specific airplane. If there are any preferences of routing, we'll need to know that. We'll also need to know the value of the cargo. The value of the cargo is used to determine the marine cargo insurance, and I'll cover that a little bit more in detail on a later slide. There's a sample quote. I'm just going to flip through this really quickly. It's not meant to read. It's just going to tell you origin, destination, but I'm pointing out here that there are a good number of disclaimers. It's going to tell you that they're good for only a certain length of time, and you'll need to read these disclaimers carefully. When you quote to your customer, again, it's only good for a specific length of time. You should advise him of that. Your quote to your customer must include all charges. You don't want any surprising in the end. Your quote that you provide him, and it's normally they may ask for a pro forma invoice, which is a pro forma invoice just looks like the commercial invoice is going to look. It's very important if they ask for one that you give them an accurate pro forma invoice, because they will use that for official purposes in their country, such as an import license may be required. They will possibly use that for the letter of credit, to open the letter of credit. So they also may need that for destination entry requirements. Every country is different. Every country has a different set of requirements. So if they ask for a pro forma invoice, it is not just an estimate. It should be pretty much an exact replica of the commercial invoice. Okay, so we've got all that behind us, and we're ready to export your cargo. We've probably from the quote we've determined, and your product, we've determined whether it's going to go better ocean or air. Air, of course, is more expensive, but it's a lot faster. Ocean is going to depends if you get a vessel that's going to get there and 1 week is going to probably be more expensive than 3 weeks. So it's the same kind of when you're booking your airline flights. It depends on the route and how it's going as to the cost. With booking cargo, your freight forwarder also can make the booking for you, either air or ocean, and that is to reserve the space for the carrier. For your ocean as well as air, you're going to have a window of opportunity to deliver your cargo, whether it's a container or not, and if you deliver the cargo too soon, most ports won't accept it, but if it's too soon, the cargo is going to incur storage. If you deliver it too late, past the cutoff time, it's going to miss that vessel. It's going to have to sit at the port or the airport for a week or two or till the next vessel comes in, and you'll have to pay storage. So we want to make sure we deliver within that window of opportunity. In addition to the cargo cutoff date and time in some cases. There's also a document cutoff date and time. And sometimes we have to coordinate that very closely, that your document cutoff time may be prior to the container cutoff time. So we will need to know all of the information. You would provide that to your freight forwarder, who can complete the documentation and provide it to the carrier, again, sometimes even before the cargo is even delivered. So as soon as it's loaded, you need to get the accurate information to your freight forwarder immediately. Again, this could be up to 5 days before the vessel comes in, so we will coordinate that closely with you. Okay, now, when I spoke about the document cutoff time, the reason for that is there is a document that was required to be filed on all export shipments on, it's called Electronic Export Information. It used to be called the Shipper's Export Declaration, but now it's required to be filed through the automated export system for any Schedule B number valued over $2,500 per Schedule B. So it needs to be it needs to be filed. The purpose of this filing is used for export control. Customs will look at it to kind of see what's being exported. They'll view the Schedule B numbers. They may even want to look at the cargo before it's exported out, so they'll have an opportunity to do so. This document is also used for statistic purposes. So that is where they get our balance of trade figures, what commodities are going to what countries. There's a penalty for not filing this document on time, and it's $1,100 per day with a maximum of $10,000 per violation. So it's very important that you get this document, the information to us, that we can get the document filed as soon as possible. And what it does say, if you have a product, even if it's only worth $500 and there's no EEI required, you're still going to have to, we are still as freight forwarders going to have to file the bill of lading with that exemption statement stating there is no EEI filed or required before the cargo can be accepted or before the cargo can be loaded on the container. If they load it without either that exemption statement or the ITN number, which is your confirmation that the EEI has been filed, your cargo just won't go. Okay, now the next subject we're going to cover is the ocean bill of lading. We've prepared the EEI information. We're preparing the ocean bill of lading with that statement on the bill of lading to send to the carrier. The ocean bill of lading works as a cargo receipt, that they've received your cargo in good order. If there are any damaged cargo, whatever it will be, or damages received, they'll note that on the bill of lading. That would be rare. But it provides your delivery instructions. It tells you where you're picking up the cargo and where it's going to. It can serve as a title document and be negotiable. For instance, the draft collection that I had stated previously that goes through the bank. So the terms and conditions of carriage, and I'm just going to cover ocean bills of lading right now. Air bills of lading generally travel with the cargo, so that's just because it's so fast, the airway bills are not negotiable. They have to travel with the cargo because they can't just sit at the terminal when they arrive at the destination for air. But for ocean, they do. On the ocean bill of lading, the one thing to be cognizant of is when you issue a bill of lading, you are agreeing to the terms and conditions that are printed on the face of the bill of lading in very tiny print. It appears that where you type your destination and stuff like that is the face, but actually the other side is the face of the bill of lading. It's the terms and conditions. Be sure you read these terms at least once, because this is what you're agreeing to do. There are two very important issues on almost every ocean bill of lading, and one is their limit of liability, which is currently $500 per package, but they're only liable if the carrier is found to be negligent. The second condition you're agreeing to is general average. And I want you to kind of save that term, general average, in your brain. We'll cover that a little bit later. I'm going to go ahead and follow through now on the limit of liability with the $500. That will probably be changing. They're ratifying that, and it will be increased just a little bit. But the thing to remember is they are not liable unless they're found negligent. And if they're found negligent, they have a maximum liability. Actually, on the air, they also have a maximum liability of about $9.07 a pound. So keep that in mind, too. All right, so your terms and conditions on your ocean bill of lading. When your ocean bill of lading has been released and you've got your original bills of lading you're ready to send to your customer, your buyer is going to have documentation that's required. Depending on the country that it's going to, the product that's being shipped is going to determine what documentation your customer will need to present to their customs so that they can get their cargo released and in their hands. They will have almost every country will require a commercial invoice. You'll need a packing list, especially if they're different size cartons, or the letter of credit requires a packing list. If you're shipping to any country that participates in a free trade agreement or gets a preferential duty rate on cargo coming from the United States, they will require a certificate of origin, and that certificate of origin will not always be the same rules of origin. In other words, every country has their rules to say if it consists of 60% this and 40% this, it's considered U.S. origin. Well, if you ship to another country, they may not have the same requirements. So you have to make sure that you meet the requirements of the free trade agreement, and they're all different. They all have their own different regulations. There may be some product certificates. For example, a phytosanitary certificate is required for most agricultural goods. If you ship chemicals, for instance, you may be required to provide a certificate of analysis. So all of those documents will be required. Some Latin American and Arab countries still require that we provide them with consular documentation and legalization. That means when we get our certificate of origin, commercial invoice, and possibly other documents, we notarize them here, and we have to send them, say, to an Arab chamber that may be located in Washington. We have a courier that will send it over there. The Arab chamber will legalize those documents and send them back before they can be sent out. So all of that needs to be figured into the time frame and being able to provide the documentation. All right, so all of these considerations that we've met, we've complied with U.S. regulations, and now we need to ensure that we comply with destination country regulations. Each freight forwarder should have general information for every country that you're exporting to, what's required to that country. So you'll use your freight forwarder as a source of information. You'll also use your customer. Your customer will know maybe that specific product in their country, what requirements are made there. If there are any markings, compliance markings, CCL codes. Again, each country has their own set of regulations as to what's required. You may be required to provide a pre-shipment inspection. And a pre-shipment inspection, what that is about 33 countries throughout the world who have determined that that country wants to pre-inspect the cargo being exported to them prior to that cargo being exported. So, for instance, if your buyer is in Colombia, Colombia will arrange with a third-party surveyor to come into the United States to watch and look at your cargo as it's loaded to determine that, and they will inspect the commercial invoice. They're not there to set pricing, but what they're there for is to protect the destination country's monetary value. They want to make sure that the cargo is not highly undervalued or highly overvalued. They don't want the money to go out of their country that's not supposed to, or they don't want to pay higher for something that is devalued. The cost of that inspection is paid for by Colombia or by the country that's requiring it. So that's a pre-shipment inspection. You'll have to know if your country that you're exporting to requires that. You also may, some of the countries have become quite stringent in corrections that are made. For example, when you're exporting to Brazil, we're seeing now if you've made a typographical error and you have to have that document corrected after it's been shipped out, we're seeing fines that are beginning at $3,000 just simply for typographical errors. So we have to be careful and make sure that our documents are accurate before they're going out. If there are any quarantines, may be required, the country you're going to may have a quota. You'll need to check that. And that's another reason not to quote DDP. If you've quoted DDP, you get your cargo over there, the quota's closed, it may sit for a year, and you've provided that buyer with a price based on them receiving their cargo. So you're going to have to eat those storage charges. Another reason, again, to be careful when shipping with D-terms. All right, so now we've met all of the U.S. requirements. We've met your destination country requirements. Now we need to make sure that we meet your customer's requirements. Letter of credit stipulations. If there's a contractual agreement, we need to make sure, you need, as the exporter, need to make sure that that's been met. And your customer's going to be happy for your receiving your goods so that he'll buy more. Routing requirements, they may specify a specific flag, vessel, or a specific port. For instance, some countries give preferential duty treatment to cargo arriving on a specific flag vessel. So you need to check again with your customer and make sure you dot your I's and cross your T's. All right, now we come to one of the most important things that I feel like many exporters overlook, and that is marine cargo insurance. I'd asked you before to be sure that you read the terms on the bill of lading. Carriers do have their limit of liability, but if something happens, you're going to have to make sure that cargo is covered. Even if your consignee says, oh, well, that's okay, I'll cover the insurance. Make sure it has a proper insurance. Here's where this general average. Let's say your shipment is valued at $15,000, and you figure, okay, well, I'm not going to insure that cargo. If I lose a cargo, I've lost $15,000. That's okay. I'm willing to take this risk, even if the carrier is not going to have the $500 per package of liability because they weren't liable for it. What you're looking at now is a term called general average. The term average means loss, so you're looking at general loss. What you're agreeing to when you ship on an ocean bill of lading is that you, as an exporter, will take responsibility and liability for the safety of that voyage, and you will share in any losses proportionately with any parties involved, even if the carrier is negligent. When I explain this to most exporters, new exporters, they go, no way, they can't do that, but they do, and you're agreeing to it. That voyage is just as much your responsibility as it is the owner of the vessel, as it is the captain. And so let's look at some examples here. Let's take that same $15,000 shipment that you've shipped, and you said, oh, it's okay, I can stand to lose $15,000. If you have no marine insurance coverage on your $15,000 container, it's on a vessel. The vessel hits high seas and it has to ditch the top layer of containers, just has to throw them overboard for the safety of the voyage. Well, you think, well, gosh, my container wasn't one of them, so that's okay, my container made it. That's not going to be the case. What's going to happen is your carrier is going to declare general average for the amount of his loss. When it arrives at the destination, everyone with cargo on that vessel will have to pay proportionately for that loss. Now, if you had taken out marine cargo insurance, you would simply, the surety that you took it out with would post a bond at the port of destination, your cargo would be released, and that would be it. You just wash your hands of it. If you didn't have marine cargo insurance, you're going to have to post a cash bond overseas for the value that the carrier tells you you have to pay. You may be able to, can you afford that? You don't know. Maybe there's, you know, the top layer of containers, maybe they weren't worth a whole lot. But what if the entire vessel sank and the carrier declared general average? Can you afford to pay for an entire vessel or your proportion with a cash bond overseas in another country? The good news is marine cargo insurance is just cents on the dollar. It can be easily arranged through your freight forwarder. You can arrange it for yourself through your regular package policy, but be very careful because a lot of insurance companies aren't familiar with the general average clause in ocean marine industry. So make sure you have marine cargo insurance. If nothing more, you can insure it for all risks, but you can insure it just for that general average liability. Again, very inexpensive, but something definitely to consider. And finally, record keeping. You, as the USPPI, that is the United States principal party in interest, and that's regardless of how you sold it. If you figure, well, I just sold it Ex Works, he did all the exporting, my buyer did all the exporting. No, you are still considered the USPPI. You are responsible to maintain your documents for 5 years from the date of export or from the last known transshipment date. If your freight forwarder has filed your EEI information, your electronic export information, you need to maintain proof of that filing in your office. In fact, even though the freight forwarder files that, you are the one that's responsible. It's kind of like your tax documents. Your CPA filed it, but you're responsible for that information, so I would suggest you get a copy of that and make sure that no mistakes have been made. And as good as freight forwarders are, and I hope I've been able to convince you that they're just, you know, invaluable to your export program, the one thing that freight forwarders cannot do by law is relieve you of your liability as an exporter. You will always be responsible for adhering to the Export Administration regulations, and you cannot by law transfer that liability to a third party. So again, it's a partnership. We work together to make sure we all are in compliance. All right, in the last slide, I've developed some of the export web resources, some online information that you can go. You've got the Export-Import Bank with assistance, the Small Business Administration, country requirements, and I've also at the very end given you the information on the Certified Export Specialist Program that I spoke about with the NCBFAA. I understand these slides will be available to you, so I hope you enjoyed the presentation, and if there are any questions, I think Brian's going to facilitate those.
Well, actually, Jen, I believe that Linda's going to actually have a moderator to bring on for the questions.
Yes, that's great. Thank you, Jen, for your excellent presentation, and also Brian for your introduction. And now I'd like to give this presentation over to the operator to open the lines for questions. And if you have a voice question, she'll tell you what you need to do.
Okay.
Thank you. If you would like to ask a question, you may press *1. Please record your first and your last name clearly when prompted. To withdraw your request, you may press *2. One moment, please. One moment for the first question. Our first question is from Aaron Bryant. Your line is open.
Yes, I have a question. First of all, I'd like to thank you for taking the time out to give us this insight, because for someone such as myself who's new to exporting, great resources, but now actually learning what I'm supposed to be responsible for without having to spend any number of years trying to find out is definitely appreciated. I wanted to find out if there is currently, I believe there is some software available. I was looking for it and would allow you to ensure that you are compliant. It's an integrated software, and I believe it checks all the countries that you're exporting to, and it gives you actual checklist, as it were, of every piece of documentation that you would need based upon today's current standards so that you are in compliance.
Right.
Okay. I was wondering is there, I've seen it, I believe it's called automation software, AEO, assessment software.
You're going to have to know, you're going to have to understand exports, what's required. My recommendation is you first speak with someone who's knowledgeable, and you go through a couple of shipments with your freight forwarder. I believe after you do that, you will determine that it's not worth your time to do it yourself and to rely on the experts to do it, to handle it. Freight forwarding fees are relatively inexpensive. To me, this automated systems would be more for large companies that have an export compliance department that, just want only that automation. They don't need any additional knowledge. They've got all the knowledge in-house. And, again, I encourage you, the more you learn about what a freight forwarder does and about exports, the more valuable that you will see that human intervention. I've done thousands of shipments, and no two are alike. Believe me, there's something that comes up every time. There's a flat tire on the truck. There's an insurance claim. There's an additional fee. There's demurrage. There's so many variances of things that can happen to that shipment along the way. You want somebody that's going to be able to hold your hand, like I say, through that shipment.
Oh, believe me, I plan on becoming their Siamese twin, because I do realize that it is valuable to have that human interaction, because unfortunately software won't be able to pick the phone up and make a phone call to someone to solve your issue.
Exactly.
Problem. Do you guys have a list of freight forwarders that you would recommend that we do?
Absolutely. The ncbfaa.org, that is that's a list of our membership, and as I said, there's over 800 freight forwarders throughout the United States that are a member of this organization. If not, if the Federal Maritime Commission, who licenses freight forwarders, will give you a listing of those who are licensed, and so that's another source there.
Yeah, and Jen, just a quick note on the NCBFAA website. If you just log on, like Jen said, to ncbfaa.org, the third tab over from the top, there's a Find Members. You can go in there and you can plug in either the name of a forwarder you're looking for or a city and state, and it will give you members that are associated with the organization, in that location.
Good.
So that would be a good place to start. But like Jan said, too, there's a full list on the Maritime Commission website.
Okay. Well, thank you very much. That answers all my questions.
Thank you.
Our next question is from Ms. McGowan. Your line is open.
Hi. I recall you saying earlier that if somebody were to question you about who's on your board, that should raise a red flag. When we are going through the list to check to ensure that we're not dealing with any restricted or barred parties, should we be asking questions like that, exactly who's controlling the companies? To what extent should we query our customers on your boards or your ownership?
Gotcha. And if you have any suspicion of who you're exporting to, what we would normally do is if the company, we just go by the company's names, who you're exporting to, and if there's any suspicion there, you may want to drill down further. But normally it's just that company name and the party that you're dealing with, that you're responsible to make sure they're not on a denied parties list.
Okay, good.
Yes.
Our next question is from Michael Andre. Your line is open.
Actually, I have a follow-up question to that one is, what happens if you have a country like Canada where they don't have an embargo on Cuba, and so here we are, a U.S. company, and we're dealing with a Canadian company that is in turn dealing with the Cuban company. If you don't ask that question of, hey, this subcontractor you're mentioning, where are they from, who's their control, you've missed the part where they're from Cuba.
And that is an excellent question. There is no answer, and I attended a BIS seminar, and they asked a very similar question to that, and their BIS's response was, again, it is illegal for us to do business with Cuba unless we have a license to. Now, they do allow some foods and specific items to go to Cuba, but you have to have a license through the Office of Foreign Assets and Control, so there are shipments that can go there. And this one gentleman had asked that question, but he is from a Canadian company. And in Canada, of course, they do business with Cuba. And in Canada, it was illegal for his company not to do business with Cuba. So that was a catch-22 situation. And the BIS gentleman said there is no real answer to that. The only thing he could say is, as a United States company, you cannot do business with Cuba unless you're authorized by the Office of Foreign Assets and Control.
Yeah, thank you. I have an original question if you have time for it.
I do.
The question I have is, a long time ago when I stuck my nose in the regs, the $2,500 limit, if you had something with a specific ECCN that needed a license exception or a validated export license, my understanding is even if you're below the $2,500 limit, you still have to declare it in the automated export system.
That is correct. That
okay,
is correct.
Thank you.
So if you have a licensable shipment, now if it simply has an ECCN but there's no license required, you would not be DEI would not be required. But if there is a license required, you do have to file your EEI. So thank you for clarifying that.
Okay, thank you very much.
Okay.
Once again, if you would like to ask a question, please press star then 1 now. At this time, there are no further questions in queue.
Okay, well then, if there are no further questions, this concludes our presentation. Once again, I would like to thank both Brian and Jan for their time and expertise in today's webinar. Also, please note the contact information that is in front of you. I would note the phone numbers and emails, and you can contact Brian and Jan at any time after this presentation. And we will be sending out the PowerPoint presentations from this webinar, as well as for those of you who joined in late, you can also view this taped. So that would also help you. Thank you all to all of our participants for joining us. Thank you once again to our speakers. And remember to please keep checking the www.export.gov website for more information on upcoming webinars. Thank you, everybody, and goodbye.
One moment. Thank you for participating in today's conference. All participants may disconnect at this time. Thank you.